Good morning. Welcome to the Thursday Thread. I'm Andy Lockwood, and joined as always by my friend and partner and mentor, Neil Guilmette. Good morning, Neil.
Good morning, Andy. How are you?
Doing great. How are you?
Any better? I couldn't stand it. My regular answer.
Typical Neil answer, which I appreciate.
Well, it's funny. When my father was dying, he knew it. And he'd get up in the morning and he'd look around the world and he'd go, Neil, he said, it's a great day to be alive. And I learned that attitude from him. Be thankful for every day you get.
Good. I agree. So Thursday Thread is our weekly show that's designed to help the accounting profession make more, keep more, and enjoy their quality of lives even more, maybe even fall in love with their accounting practices or businesses, as you distinguish, all over again. And today, along those lines, we're going to be talking about something a little negative. We're going negative. We're going to be talking about 5 ways that accountants sabotage themselves, how they can not get out of their own way. And my suspicion is we could probably do 50 ways, but we decided to call it down to 5 ways. So Neil, let's talk about this list that you drew up, and see if we can help some people get out of their own ways.
Well, the first thing starts off, Andy, with asking yourself questions. So anybody that's listening to this, even if you're not an accountant, you have to ask yourself, do you have a business or do you have a practice? And there's a big difference between a business and a practice. And usually what happens is, and the reason I made a distinction, usually if you see yourself as having a practice, the practice runs you. If you see yourself as having a business, you have to run it. And too many accountants out there have a practice. And that's because they built it off what I call the class of 1946 model.
Yeah.
That's the way we've always done it. This is the way they did it in 1946. And when my great uncle split off to open his first accounting firm back in 1950, he ran it by that 46 model. And then when my cousin took over in 1970, he ran it by that same model. And basically,
well, what's wrong with that? I mean, it's 2020 is about the same as 1946, isn't it?
Yeah, right. And the problem is the 1946 model is based upon providing compliance services. And there's a way of going about doing business in that 46 model that gets in the way. Just as a quick note, it's about taking on any kind of clients that you can possibly take on. So if you look at the client base mix of the class of 46 model, they have every kind of client you can think of. There's no direction, there's no specialization. They rarely break them down into individually managed profit centers, which accountants are notorious for doing. I've asked every client that I've worked with over the last 40 years, can you tell me your profitability per engagement? And I get that deer in the headlights stare. Why? Because we don't look at profitability per engagement as a way of running our practice or our business. We look at billable hours and realization rates. We build out 10,000 hours. We only got paid for 7,000 hours. So our realization is rated 7,000 hours of billing. I mean, times whatever our average billing rate is. That's no way to run an airline. You need to look at profit per engagement. If you're sitting here with 100 clients and 15 of those clients are actually losing money and another 5 are marginally profitable, that means 20% of your time and effort is just spinning your wheels and making smoke and generating nothing. But they're reluctant to do anything about it.
Yeah, and usually you can look at 80% of your business as being not optimized, and,
right.
And 20% is the highest and best use of your time. So it could be a much bigger problem than you just indicated.
It's a lot bigger problem. In fact, I've done a couple of workshops on it. I believe that there isn't an accounting firm out there that can't generate anywhere between 40 to 70% more revenue than they're generating right now with 10 or 15% fewer clients without taking on any new clients. That's how much money they're leaving on the table by doing the class of 46 mentality.
That's a big statement. I mean, to say that you can be more profitable by ditching a significant chunk of clients, that probably freaks out some people watching this. But explain why that's true.
Well, what's interesting is I've got CPAs that some of them, I know David Goodman is watching, usually is, but I've got CPAs that are amazed that they lose 30% of their clients and they're making more money. Very simply this: if you have clients that are marginally profitable or unprofitable, or more importantly, uncooperative, where their procrastination is constantly becomes your emergency,
right,
you're not operating efficiently. So the operational efficiency, optimized operational efficiency, is the key to profit in any business. Anybody that's dragging you down, that's slowing you down. I mean, I have one firm, a specific example, one client, where the office manager said we had to call this client 9 times to get them to give us their bank statement. And the 9th time we called his mother, and she got on him, and we got his bank statement. That's the way they've done it. And let me give you an example of class 46 mentality.
See, I would start to interrupt. I would say, no, you didn't. You didn't have to call them 9 times. You had to call them once, maybe it's a courtesy twice, and then it's up to them.
Then it's up to them, exactly. And then you let them go down.
Yeah.
But they won't do that because they're terrified of losing the client.
Yeah.
In other words, part of class of 46 mentality is that the client is king. The client is the prize. And we can't do anything that might upset the client because we might lose a client. And my approach is, if the client isn't cooperating and is not profitable, why would we want to keep them in the first place? So billing out, starting with the class of 46 mentality, the number one issue is you got to stop selling services by the hour and start selling results, the value that the results bring.
Right.
That's
value.
A completely different mindset.
Yep. Yeah, I mean, I'm a college planner. I'm self-employed. I don't want to pay someone by the hour. I want to pay less in taxes.
Right. Exactly.
I want results and value.
More importantly than that, not only do I want to pay less in taxes, but there's nobody better suited than a CPA with 10 or 15 years experience with business to become my consigliere, to become my consultant,
yep,
to help me become more profitable, to help me make more money with less work, to help point out the mistakes that I'm making, the profit leaks that I have. They don't do that. And that's so much more valuable than ticking and tying and debits and credits. I mean, your debits and credits can't be any better than my debits and credits. It just doesn't work that way. And another thing is that the class of 46 model is reactive rather than proactive.
Right.
It kills you right there.
Well, I think as a client, again, I'm not an accountant. I'm a college advisor, but I know a lot of accountants and I know a lot of self-employed people. And I think for us, speaking on behalf of the self-employed club, I think we all want to be led. I think we want to be told, okay, do this, 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 and this, and your result will be, X. Well, I don't want to be the one coming up with these ideas and talking to my accountant about them and have them react to me. I'd rather them be proactive and take me by the hand with the flashlight through the cave and say, this is how I'm going to get you to the promised land.
And that's a big important thing, because I was never led in my 50 years of doing business and 40 years with accountants. I made every mistake you can possibly make because I had nobody to show me the right way.
Right.
So I was the one that was constantly working down the blind caves and having to come back and walk down another blind cave. And finally, out of the 9 caves, I found out one that was the right one, and it could take me to the next destination.
And you're the rare 1% type of person who would actually do that. Most people just sit around and assume their accountant's going to help them, and they don't go through the effort of trying to investigate all these other paths. I
didn't have a choice. I had 4 daughters and a wife and a mother to support, and an expensive boating habit. So I didn't have a choice. The failure was not an option for me. Yeah. So you keep going until you find your way. But the class of 46 thing is the biggest thing. It's the whole mentality of I'm in the practice of accounting rather than I'm in a financial services business based upon accounting. A big difference between the two. And that's the biggest change they have to make. Tying right into that Issue number two, self-sabotage issue number two is self-image.
As in a poor self-image.
Well, either a poor self-image or the automatic self-image from the class of 46.
Okay.
When you walk out into a networking function and somebody says, hi, my name is Neil Guilmette. Who are you and what do you do? And your answer is, well, my name is John Smith and I'm a CPA. In my mind, I went, yippee, another one of those boring bean counters. If you had said to me, my name is John Smith and I'm a profitability consultant and CPA with a very, very different approach to client relationships, I'd have stopped and said, well, what do you mean by that? And opened the door to a conversation. But you don't see yourself as that. You see yourself as an accountant. And if you see yourself as an accountant, you'll be treated like an accountant rather than a business advisor. So
what's the problem with that?
Well, accountants get paid by the hour for doing things that we don't understand and don't care about. Business advisors make a lot more money for a lot less work, and they still use their accounting as the foundation for the advising. So you're better off. I mean, the difference is instead of selling services by the hour, you're doing what's called value pricing, which is again different from value billing. It's a big thing in the accounting profession. Oh, value billing, value billing. What does that mean? That means we bill you, the client, for the extra hours that it took us to do your work after the fact, and then we cringe because he's hoping nobody screams. Value pricing is about managing the client's expectation up front, helping them see the value that we're going to bring, and get them to agree to pay us so that when the bill comes through, there's no argument. Mm. And in fact, that's another problem. We need to stop doing the work. A month later, sending out an invoice. A month after that, starting to chase our money.
Yeah.
Everybody else gets paid. You know, I'm a firm believer in God we trust. Everybody else pays cash.
Yeah.
So we have a whole slew of people that are wasting a tremendous amount of time and energy doing all this invoicing, after the fact invoicing, yeah, and then sending it out when they can get to it. And then somebody's got to follow up to see if we did get paid. And if we didn't get paid, it goes up the ladder until somebody finds. And there's a huge amount of clerical dollars wasted, energy wasted, and cash flow, which is king, is destroyed because we're doing it the way the class of 46 always did it. So guys, you want to come in, you pay me in advance with a retainer. And when your tax return is finished, you pay it in full when it's done.
Okay, I was going to ask you that because you know, in my practice, we pay, everyone pays up front, or they're paying us monthly before we do the services. So there's no ethical concerns about being paid up front or having a retainer or anything like that in the accounting profession, right?
No.
Yeah, I would make the argument that if you have a problem with people complying with you, you know, with following your directions, like the example you gave of the guy who called the client 9 times, I think the people who pay you up front generally don't have that issue. They're going to be more compliant because they've already made that investment and that commitment to you. That's what I found in my world.
The other side of the coin is that self-image thing, is that when a client doesn't pay you or doesn't cooperate with you, you keep eating shit sandwiches year after year after year, even if you don't like bread.
Yeah.
And my methodology is you sit down with the client and we have a come to whoever meeting, whether it's Jesus, Joseph, Jose, whoever it is. We're going to have a meeting with you. We're going to say, Andy, I love you as a person, but as a client, you really suck. All right. I can't afford to do business with you the way you're doing things right now. Because you're doing this, it's taking food off my kid's table. It's not working. So we have a couple of options here. We either double your fee or we'll help you find another accountant. Which would you prefer? And they're terrified to do that.
Yep.
But the interesting thing is, and I learned it 40 years ago with my second accounting client, who worked his butt off. And he said to me, Neil, I work 7 days a week, 14, 15 hours a day. And I'm barely making enough to feed my 3 kids and pay my mortgage. And I looked at his practice and I did a little analysis. And at that time, he was realizing $25 an hour. I said, the problem is simple. We're going to triple your fees. He said, I'll lose half my clients.
So do the math.
You're making 3 times the money with half the work. Is that a problem?
Yeah.
But the mindset doesn't work that way because they believe that good clients are very hard to find. I believe, and I have proven time after time, that good clients are easy to find when you know how to do it and you have a process that you can complete, a repeatable, trainable process. You can get all the good clients that you want. You have to learn how to do it, just like you have to learn how to do accounting.
I think also that once you get one or two, solid A-list clients, they'll start referring you to other people like them. And you'll just grow organically, or if you have a system in place to cultivate referrals, you'll accelerate that. But
Absolutely.
But it'll also free your, if you get rid of the crappy clients, it frees up your time to find more A-list clients.
There's a triple whammy on the crappy clients. Number one, time is money. You're expending tremendous amounts of time to do work for people that neither appreciate you or pay you well. Why would you do that? So when you eliminate that, you eliminate a tremendous burden of management, and a tremendous amount of aggravation is reduced. You have time to spend on the clients that are happy to pay you well for things that you're able to do, and you've taken pressure off the deadlines also. I hate deadline pressure. Class of 46 is used to living with deadline pressure. It's tax season. It's deadline pressure. The accountants that I work with, they're done with their taxes 2 or 3 days before the deadline because they manage the client's relationships in a different way. And that's part of owning your power and self-image. They have to own their personal power or professional power and stop being subservient to clients.
Yeah, listen, if you mentioned this kind of between the lines here, but if you have a bunch of crappy clients who are financially or economically bad for your practice, the emotional drag, I would argue, is probably a lot worse than the economic drag, because it just eats up your energy. It sucks the life out of you. And the day you fire a client, I still enjoy this, but every once in a while we part ways with the client, and it always comes with a huge sense of relief, like a 2-ton weight has been lifted from our collective shoulders.
Absolutely. There's nothing like firing a client to make you feel better.
Yeah.
It's a great way to start Monday morning.
And it's always overdue. And it's always like, in my case, I'm the CEO of our firm. I'm always the last person to sort of know that. And then finally, when I started asking around, everyone's like, yeah, please. I mean, I didn't want to say anything to you, but God, yeah, please do that. It'd be so great.
It also kills your staff morale.
That's what I mean. Yeah.
It really does kill morale, momentum, and it has so many detrimental impacts.
Yep.
So having the right self-image and owning your power as a professional with your clients rather than being subservient to them is the second biggest mistake. Mm-hmm. The third one, and they all kind of tie together, the third one is what I call fear of fee.
Yeah.
Well, first of all, if you're out there and you're listening, stop charging fees for services. No one likes to pay fees. Hello, no one likes to pay fees. However, everybody is willing to make an investment in a relationship that helps them make and keep more money and reduces the pressure that they're living with. So what you need to do is start helping people make and keep more money, helping people increase their effectiveness and profitability and throughput process, which is another term, and manage their throughput process while you're doing your accounting and their tax returns. You need to be focusing on, how is my accounting relevant to the throughput process of my client, and how can I find profit leaks to help him plug to make myself really valuable?
Yeah, so you're talking again about the value, which is the most important thing, because we all look at expenses, like I've got to pay the light bill, I've got to pay the cable bill. Those are costs. I guess I get something out of them, probably not as much as I wish. But I'm willing to invest in something that's going to provide me a return on investment the way you describe, which is making more, keeping more, better quality of life, and all these means to the end, throughput, whatever. Those are all ways to get there. But the messaging and the psychological feeling that a prospect gets talking about investing versus paying a fee,
right,
totally different.
And an investment, by definition, demands a return.
Yeah.
Now, interestingly enough, I have a thing that I call the lonely man at the top theory. And the typical business owner is the lonely man at the top. If there are business issues that his staff can't solve, they end up in his lap. If his staff has personal problems, they end up in his lap.
I hate those.
He's got a wife and children that their problems end up in his lap. Maybe he has aging parents or aging in-laws or a useless brother-in-law, and those problems, he's the guy at the top that has to have the answers for everyone for everything.
Yeah.
I go through a discovery thing like that with us. So I said, all these people are turning to you, Andy. They're all turning to you. You have to have answers for them. Who do you turn to?
Right.
And you get a deer in the headlights stare and say, well, nobody.
Yeah. Well,
So
it can't be my spouse. It can't be, because no one really gets it. That's why it's
can't be your competitors, can't be your staff. You can't let them know what's going on. So who do you turn to? Well, let me ask one more question. What if there was a knowledgeable business professional who not only understood you as a person and your issues and where you wanted to go, was willing to help you get there, but also understood your business to help you better utilize your business to get you where you wanted to go? Did that have any value to you?
Of course.
Well, does it have more value than somebody that counts your beans and gives you a statement every quarter?
Of course.
And that's where the CPA is missing the boat. They have that value. If you've been practicing for 15 years, just through osmosis, you know more than 90% of your business clients. Never mind the skill sets that you have and analytical skill sets that you have that you've developed.
Yeah. And I just want to throw in here that there's an obvious parallel here, which is you serve that role for your clients that you counsel. I certainly can attest that I talk to you about things that I really don't feel like I can share with anyone. Like when I talk about, our income, or, how much money we made the last week or so. If I talk to anyone else, it's bragging. If I'm talking to you, it's almost like not a confession, but
check in. Yeah, just check in.
Well, I'm not doing it to brag. I'm just saying, like, things are going pretty well. If I said to somebody else, it would almost seem like I was in the middle of a pandemic, trying to rub it in.
Right.
Something.
Right.
So,
my approach is, okay, now what can we do to make it even better?
Yeah.
What can we do to tune it up a little finer?
Yeah.
It flows right through to all the professions. It's not just accountants. Lawyers do the same thing, and I know you're a recovering attorney.
Yeah.
So that lawyers do the same thing. They don't teach business in law school, medical school, dental school, accounting school, architect school. They don't teach business. And yet every one of you every professional is in business.
Yeah. Yeah. And if you're an accountant and you're watching this, I just gave a personal testimony for Neil and his ability, but you can do the same thing for your clients no matter what they're in, because chances are they have the same issues. They can't talk to their spouse or their employees or their cousins or, whatever, because there's other agendas that conflict with theirs. But you can make yourself more valuable to your clients by having those conversations. And this way it's like casting an iron fence around them. They'll never leave you for another accountant if you build that relationship.
Absolutely. They'll never leave. And they don't fight about fees. And they don't want to see how you, every hour, how come you billed me this 15 minutes? It doesn't happen. What's really interesting is that in the dental profession, for one, which is an area I'm very familiar with also, as well as the accounting profession, very often you'll see a group of CPAs get together to talk about marketing. Talk about the blind leading the blind. There are dental things where they get together once a week to talk about marketing their dental practices. We're talking about dentists talking to dentists about marketing, of which none of them know anything.
Right.
But they feel good because they feel like they're doing something about it. The same with accountants.
Well, they're probably all bitching and nothing's working.
Well, to them, if they spend a lot of time to get a little tiny piece of benefit out of it, they've done something. If you look at the knowledge that you have over 20 some odd years of direct marketing to bring leads to the surface, combined with the 50 years that I have of how do you close those leads efficiently, you put those two pieces together. That makes, I don't care whether you're a dentist, you're an accountant, whether you own a manufacturing company, the knowledge that you and I have developed over the years together for the two parts of the funnel, the upper part and the lower part, creates a huge impact on any business, because that's what we do. You don't drill and fill. I don't drill and fill. I don't do tax returns. I don't even want to sign my tax returns. never mind do one. I want to pay somebody to do that for me because it's not something I do.
Mm-hmm.
But when it comes down to closing, when it comes down to developing relationships, when it comes down to direct marketing, which is what you do so exceedingly well, I mean, you blow my doors off on that stuff, on how to bring the prospects to the door. And once we get them to the door, what I do closes them rather well, which you've also learned to do. So it's a great symbiotic relationship that we have, and the accountants out there could benefit tremendously from it. I'm just watching the clock. I don't want to run over because we've only hit 3 out of the 4.
Yeah, we got 2 more.
Yeah, we've got 2 more. So let's touch on the next one, is what I call lack of real-time differentiation. If you are not perceived as different, you're perceived as the same. If you're perceived as the same, you're perceived as a commodity. The only question I can ask you is, how much is it?
Yeah, and why should I hire you compared to the other 24 competitors that are within a 3-mile radius?
Why should I hire you? What makes you different? And what makes you different in terms of value to me? And what I hear from accounting firms as well, what makes us different, we care about our clients.
Oh, good.
And we return phone calls promptly.
Oh.
Within 24 hours, we return phone calls, and we do timely, accurate work.
Do people really say that?
Yes, absolutely. I had the managing partner of a 7-partner firm over in New Jersey. And I was sitting with all 7 partners plus the managing partner, 8 of them all together. And I said, what makes you different than all your competitors? Well, and nobody could come up with it. Finally, the managing partner said to me, Neil, he said, we all say we're different, but we're really not.
Right. Well, that's the most perceptive thing I've heard in a long time.
Isn't that special? We say we're different. Don't you think it would pay to actually find a way to be different? What a concept.
Well, they are different. They just can't see it. They can't see the forest through the trees.
They can't see it, and they can't articulate it.
Yeah.
Which is why I'm such a nut on precision of language and learning to converse in such a way that you paint mental pictures for people that create a perception of difference.
Can I tell you? I didn't even tell you about this. Can I tell you a quick story that you just reminded me of? So
by all means,
I've had a really big week in terms of taking on new clients since we spoke over the weekend, and I was talking to a prospective family, and so I said, "So listen, do you have any questions before that you want to make sure that we get answered today?" And one of them said, "So why do you think that you're the best? Why do you think that you're the right one for us to be able to work with?" And by the way, this is someone who's like watched me for like a year. They've seen all my videos, all my webinars. I do a lot of marketing ahead of time to get to this point. And my so I think maybe 10 years ago that would have thrown me a little bit. And then in my response, but you can probably guess what my response was. My response was, well, I don't know if that I'm the best for you because we're not right for everyone. In fact, we're not right for a lot of people. So can I ask you a few questions just to kind of see what your goals are, and I can then figure out if we're a good fit, and then I could explain everything that you want to know about about our program. And I think she was taken aback by that. But it wasn't because I'm not conversing with what makes us different. That was easy for me to say. Plus, they already knew it because I do all this stuff ahead of time. But it was a very blunt question, and I was like, no, you know what? Maybe I'm not right for you. It's okay.
That's a real shocker.
Yeah.
And it's also consciously removes selling pressure.
Yeah.
I'm old enough to remember there was a toothpaste that used to have something called Gardol, and the invisible shield of Gardol popped up. And that's selling pressure.
Yeah.
People have an invisible shield that pops up. They're afraid of being sold. When you say to somebody, we're not right for everybody.
Yeah.
We might not be right for you. All of a sudden, you're saying to them, I'm not here to sell you. I'm here to understand you, to tell you if what we do can help you or not. You can then decide. But I can't get accountants to do that without training.
Yeah, my version of that is I'll say words to that effect, and I'll say, listen, not that you need my permission, but if anything sounds that's not right to you, you totally have my permission to say that or even afterward. I don't want to.
Yeah.
I'm trying to convince you of anything. I know that our program is great based on all the reviews and testimonials. I have 136 reviews on my website, and I get referrals all the time. But that doesn't mean that you're a good fit for us, and vice versa. So you don't need my permission, but I just want you to feel like there's no pressure on you.
Absolutely. And you know what? You're coming from a sincere place. You mean that.
Right.
It's not a sales technique.
No.
You mean it. And you know what the problem is with the accountants? That class of 46 model, they still use the term, we're going to go out and pitch a client.
Yeah.
Well, excuse me, but it's not about you. It's about them. So instead of going out and what I call show up and throw up,
right,
and vomit forth about how great you are and how wonderful you are and that you've been in practice for 344 years.
Yeah.
You need to go out there with the idea of, I understand and am capable of communicating the unique value that we as a firm bring to the world.
Yep.
I just don't know if it's right for you. So I'm only here to find out who you are, what you need to be able to determine if the value that we bring to the party is right for you. It may not be. It's a much better way to go about it. It's much more honest. Number two, it's a lot more honest.
Yeah, and you're not pitching; you are attracting them to you, like you say, like iron filings to a magnet, or it's like you have a catcher's mitt up, and you're fielding these throws, coming.
More importantly, you're being different in real time.
Yeah,
it's not about saying we're different because we return phone calls promptly and we do accurate, timely work, and you're not saying why you're being different in real time. You're showing them what your difference is. That makes an impact. Big impact.
And I mean, certainly in my case and in your case, I'm genuinely trying to sort. I'm trying to figure out who is not a good fit for me, and that's what everyone should be doing too. Because if you make a decision to force someone in, like a square peg into a round hole into your business, and that could turn out to be a disastrous decision.
It's like people like that. When you get the wrong clients, it's like consciously accumulating hemorrhoids. Yep. And it's just not something you want to do. Let's tap into the last major way accountants shoot themselves in the foot.
Yep.
They have tremendous resistance to change.
Right.
That's the way it's always been done. Class of 1946 mentality.
Yep.
It's so inbred that this is the way it's always been done. I mean, I've had accounting firms that are shocked when I say to them, you need to tell your clients that they need to get you their information to do their tax return in by a certain date. And if you don't get it by that date, there's going to be a $200 surcharge. You'd be amazed how many clients that you've had to chase to get their information are all of a sudden producing it on time so that they don't get the $200 surcharge. And if they don't produce it on time, you just made a major impact on your profitability because you pick up another $200 on that tax return. And the resistance to change, most of the firms out there believe in, again, that hourly mentality from the class of 46. This is the way we've always done it. We don't even think about making it different. I worked with a firm, a perfect example. I worked with a firm where I went around and I always do discoveries with the staff because the people that are in the trenches know what's not working in the business. Guaranteed. I did the discovery in the staff. I found out, now this is going back before computers and paperless. I found out that the biggest complaints that the staff people had was there was pressure to get the work out the door. Yet if I asked you to work on 4 files today, you had 4 files to work on today, you spent 20 minutes to a half an hour sometimes searching for where those files were because they were in 1 or 3 or 4 different places. So I found out it's a common thing with the firm, and there's 20 people working in a firm. So if you're spending 20 minutes per file times 3 files a day, that's an hour a day you're spending looking for files before you can even go to work on them. Times 20 people, that's 20 hours a day. times the blended rate of $125 an hour. You spend it. So I went to the managing partner that day and I said, look, what you need to do is you need to hire someone just to go around and follow up with files so that it's just a file person. That's all they're going to do. And he went bananas. What are you kidding me? I'm going to spend $40,000 a year to hire some kid to walk around and do filing? I said, yeah. Why? Why would I do that? I said, because you're losing about $250,000 a year in labor by them not having the files. Never mind what you're losing in lost opportunity costs for the time that's wasted.
Right.
He hired somebody that week, but he couldn't see that.
Yep.
Actually fought me on it. We don't do that. I got to hire somebody. You know, constantly looking at the nickels and dimes rather than the big picture.
Yeah. Listen, I think when it comes to getting clients, you know, the marketing aspect of it, we all need to be to embrace to some extent the new ways to do that. So, you know, like what we're doing, we have a media property for, you know, for this little show that we do. It's very easy to do that now. It's cheap. It's free in most cases, or very low cost. And I think as any business owner, but including accountants, they need to understand that they are in the business of marketing their services first and foremost. And sometimes that's hard to overcome. I mean, in terms of changing your outlook. When I used to practice law, like you said, I'm in remission, and just like accountants, I didn't see myself as a marketing person. I saw myself as a good attorney, and the work spoke for itself. But when clients didn't bang down my door because I was, you know, a fabulous attorney, I was like, I need to do something a little more proactive. And I gradually got over that resistance, and I changed and how things went. And that led me on the whole journey. And now finding new prospects is not an issue at all for me.
You made a major investment in changing your mindset and learning a whole different skill set.
Right.
That brought now if you had a law firm,
Mm-hmm.
you'd have a whole bunch of lawyers out there that are doing the work. You would just be there to bring the work in the door and set the standards for the work.
Yep.
And guess what? In the accounting world, the rainmakers are the ones that make the big money. It's called Neil's golden rule of business. He or she who brings in the gold gets to make the rules.
Right.
I learned that early on. So the more gold you bring in the door, the less rules you have to follow, the more freedom you have.
Listen, I remember in our old law firm in the 90s, the people who brought in the business were resented by everyone else because they were not in the office and they made the most.
Yeah.
But they were out there making money. You know, they were out there bringing in business, and they deserved it.
Well, the same thing with an accounting firm.
Yep.
I mean, who wants you to work at billable hours even if you're billing $400, $500 an hour, when you're bringing in the equivalent of $3,000 an hour in the amount of business that you're bringing in the door?
Yeah, who cares?
Where would you rather have me, sitting behind a computer billing out $500 an hour, or bringing in $3,000 an hour?
Right. Yep. Good.
So that's all of the mentality that we have. The interesting thing is that what I love about it is I'm a firm believer in process.
Mm-hmm.
And everything that we've talked about today is all process driven. And I've documented those processes over the years. You have the same thing. You're process driven.
Yep.
You have all your marketing things that are all process driven. You've got processes. We're starting to share those with our accountants also.
Right.
So what I'm doing that's different is I'm getting into the marketing end because I've got you to handle that, which I could not handle before. So now we've got the full circle. We can bring the clients, we can bring the prospects to the door, we can close them, and we can also show you how to run your throughput process at optimum efficiency. All of that puts the control in your hands rather than in the hands of the client.
Great. So let's sum up here. So the mistakes we covered with the class of 1946 management model, the self-image, that's another way to self-sabotage, is have a poor self-image. Fear of fee, lack of real-time differentiation, and the fifth one was being resistant to change. Neil, this was great. One of our best shows ever, in my biased opinion. So thanks for joining us today, everybody. If you have any questions, you want to reach out to Neil or to me about how we can help you improve your practice and develop systems that produce a steady flow of high value, high quality prospective clients to your door, like iron filings to a magnet, please just drop us a note right here on this page. Neil, any closing bits of wit and wisdom?
No, look, I think we covered a lot today. We had a lot of fun doing it, and those of you out there that are serious about building your practice, you ought to talk to us. We can do a lot.
Great. All right. Have a great week, everybody.
Signing off. Have a good week.